I'm Caroline Hyde. This is Bloomberg Technology. Coming up, scandal at the top of Samsung. JY Lee is behind bars as a bribery investigation unfolds. Plus, Snap's voteless investors. Snapchat scales back its valuation on the road to IPO as it offers up $3.2 billion in non-voting shares. And Elon Musk's new boring company. The Tesla founder's tunnel vision could forever change your morning commute. We'll explain. But first, to our lead, another twist in the legal drama unfolding at the top of South Korea's most powerful company. Samsung's de facto leader, JY Lee, has been arrested for allegations of bribery, perjury, and embezzlement. An earlier request for Lee's arrest was denied by the same court last month. Now, investigators are looking into whether Lee was involved in providing as much as $38 million to benefit a close friend of South Korean President Park Geun-hye in exchange for government support of Samsung's management succession plan. Now, Samsung denies the allegations. Joining us now for more context is Seoul-based author Geoffrey Cain, who's working on an upcoming book about Samsung. Also, our guest host this hour, friend of the show, Techonomy CEO David Kirkpatrick in New York. I'm going to take it straight out to Geoffrey in Seoul. And first of all, can you put this into context for us? Because it looks as though this trial could potentially take at least 18 months. Does JY Lee, the warrant and the arrest, does he remain behind bars for that amount of time?
It's not clear whether he will actually remain behind bars throughout that time. That really depends on what the South Korean legal system decides. But what is unusual here is that JY Lee did have an arrest warrant issued against him. His father was ensnared in a similar scandal about 10 years ago, 9 years ago, and he never had an arrest warrant issued. So that really says that the government is really talking business here, that this is, they're really going after one of South Korea's most powerful companies in a way that we haven't seen quite yet.
David, it's interesting. The share price doesn't seem to have been particularly affected by this current scandal at the conglomerate. It's incredible how the mighty do fall, but how much do you think this really does affect business?
Well, you know, with Samsung, when it rains, it pours. I mean, they're still sort of recovering and not even fully at all recovered from the exploding phone problem that they've had. And, I would say it's a company that's been in a lot of sort of it's sort of like in suspension with his father, who's really the CEO, so ill that nobody really knows who's in charge. He's been running the company, this guy Lee, who's now under arrest because his father, who they can't really get rid of because it's a family-controlled company, has been so ill. But, that's not a good situation at a time when they're facing such a massive challenge as they've faced recently with these phones. So this is a pretty daunting development. But it just goes to show how negative sentiment is becoming globally against the powerful, I'd say. I think it sort of dovetails with a lot of other global developments. What's happened in Korea with the impeachment and everything, it's a very difficult time there.
Yes, Geoffrey, if you can paint of what is going on in South Korea in general, and indeed, this is the second time that they tried to get this arrest warrant. Why do you think it was successful the second time round?
Well, this particular judge has more of a reputation for not being pro-business as the other judge. The previous judge who rejected the warrant, to be honest, we don't really know what happened in the court that day. There's no transcript that's been published. But we do know that the previous judge did have a stronger pro-business streak. And that may have explained, partly at least why JY Lee did not have the warrant issued. In South Korea, it's actually quite common for prosecutors, judges, politicians, and others to weigh the business interests of the nation when bringing criminal charges against leaders. This has happened to other South Korean leaders. There's a saying there called the Korea discount, which means that shares are often undervalued because there's not much confidence in a lot of these business leaders, and it's quite common for them to face governance and corruption scandals and to be accused of influence peddling. It's something that's not surprising to South Koreans.
And Geoffrey, just to you again, does Samsung become in disarray because of their de facto leader in jail? Or paint us the picture of what happened under the father. This isn't the first time the leader of the business has been tainted with scandal, and the business seems to be able to be directed by that very person.
Well, I've interviewed hundreds of people in Samsung at some of the highest levels, and they very consistently said that when the chairman is gone, the business activities are almost always not affected. Samsung despite what's happening, despite the governance, the poor governance up top, they do have a lot of the world's most talented designers, engineers. They do make very good hardware, and I've never heard of the actual business itself being interrupted. And that's something that Samsung really has to deal with. That's something that they have to grapple with, because they've built this empire over the past 20 years that just spans across around 70 affiliates. They make everything. I mean, they make ships, they make chips, they make smartphones, they make all the parts inside the smartphones. And a single leader, JY Lee, he may be intelligent, he may be a great diplomat for the company, but he's not someone who can actually run every single business in that way. They really do rely on their staff engineers and their managers to get things done.
Thus far, analysts unshaken, 41 buys, only one sell when you dig into the Bloomberg. Quite amazing. Author Geoffrey Cain, live from Arizona for us with deep insight into South Korea. Thank you. And our guest host, David Kirkpatrick, is going to be sticking with us. Now, the maker of Snapchat wants to raise as much as $3.2 billion in its IPO. Now, that's according to the latest filing. The company is offering shares of $14 to $16 apiece, and it is expected to price after market close on March the 1st. At the high end of the range, that would give Snap a market value of about $18.5 billion. We also learned that Snap co-founders Evan Spiegel and Bobby Murphy could each take home checks for as much as $256 million. Still with us in New York, our guest host for the hour, David Kirkpatrick, along with our editor-at-large, Corey Johnson. Gentlemen, it's an interesting one because they look expensive compared to their peers when Twitter came to the market and where they are valued now. But $18.5 billion valuation, Corey, is not as much as they originally were looking to get, it would seem.
Yeah, just like Groupon before them, they were originally looking at about a $24 billion valuation. Of course, that never came to be. Groupon's now worth about less than $3 billion. What becomes of this, I don't know. I mean, it's a certainly high valuation. On the positive side, they've got some big growth numbers on year-over-year basis. We all know the story of sort of who they're reaching and how hard those consumers are to reach and how valuable they are to advertisers. But this is an extraordinarily high price for any company of any kind with any kind of growth metrics. But for one that has negative gross margins, for one where growth is slowing so much, where there are some big questions raised. Look, this roadshow is going to be an interesting one because there's going to be excitement around the deal, but there are some very strange things in the filing, not least of which a very unsteady growth rate. There was one quarter on a sequential basis about the first quarter of this year, first quarter of last year, had only 14% growth sequentially, and then they turned that around. So what happened there? How does the business work? These are the things that are come up on the roadshow.
Yeah, David, what do you think? How much is riding not only on Snap and its founders and how much they get to take home and put in the bank, but how much is riding for the rest of the tech community on how successful this IPO? They've got to get the price right.
Well, it's one of the biggest IPOs in memory in recent years, certainly, and I think the industry is watching this with fascination because this company does sort of rise above the rest right now in that it is at least sometimes and more or less legitimately compared to companies like Facebook, Google, and Twitter. Obviously, it's way smaller, but it has that seeming potential to really be a fundamentally new kind of communication, given the passion that young people have developed for it. So I think it does sort of symbolize what some people think is the next phase of technology, driven heavily by video. On the other hand, it also, for me, symbolizes a kind of distorted financial mindset where they're not giving the shareholders any power whatsoever.
Yeah.
The idea that Facebook pioneered of creating two classes of stock has been taken to an extreme, and now every tech company seems to think that the founders ought to have essentially complete control, which is what literally they have here. So I think that's something the industry is watching with some ambivalence, frankly.
Yeah, Corey, this lack of voting rights, it seems to be, according to the own filing of Snap, that it's the first US company to really level this, to have absolutely no voting rights whatsoever when going to IPO. Is that why do you think they're being a little bit more cautious with the price tag, the overall valuation of the company?
The company is worth less money to shareholders for a lot of reasons. The company's worth less money for shareholders when it doesn't have gross profits. The company's worth less money to shareholders when it doesn't have profits, when it doesn't have free cash flow, when it doesn't let the voters, the owners of those shares exert their rights. So there are a lot of things that Snapchat is doing that's going to give it a lower valuation than it would otherwise get. But whether it's beyond the pale, it's hard to say. I mean, not having voting rights doesn't bother anyone when a company's run as well as Facebook. It sure bothers them when they're looking at companies like Groupon, where you've got multiple classes of shares. Doesn't bother them with Berkshire Hathaway when you've got an A and B shares with lower voting rights. But it sure would have bothered them at Yahoo when investors had to come in and save that company from itself, which is what happened. And so we've seen over and over again when companies face plant, outside investors can come in and make the situation better and say, we are the owners of this company. We can make this thing better. That will never, ever happen for Snapchat.
David, you're a man who knows the inner workings of Facebook and Mark Zuckerberg well, and even as we see perhaps Snap take a leaf out of Mark Zuckerberg's book in terms of voter control, we're also seeing, though, Facebook again and again trying to copy what Snapchat has been doing. Is the competition that fierce? Can Snapchat really change the way in which the world works, or will just Facebook end up dining out on it?
Well, I don't really think Facebook is primarily copying Snapchat. I do think there are product features that Facebook has borrowed from Snap, no question, and that's been even acknowledged by Instagram and others. So, but, you know, I really think the comparison between the two companies only goes so far. I mean, Facebook, when it went public, clearly had the potential to become a world-altering service that was used by almost literally everyone. Unless you believe that's true of Snapchat, you know, you almost can't justify this kind of evaluation, as Corey's pointing out. And I frankly don't think you can justify that kind of talk about Snapchat. It does not have, in my opinion, in its current design, the potential appeal to our parents, our, you know, children of all ages, you know, ordinary working people. It just doesn't have that kind of capability. So it's not a true comparison.
And when you talk, Caroline, about those voting right issues, I mean, there are issues in this company you can see right now where a careful steward of money might say, hey, why did we have to spend $890,000 last year on personal security for the CEO, right? I mean, these are issues that investors might want to say, hey, I'd like a vote on these kinds of things. You're taking it away.
Interesting. We'll see how the roadshow plays out, and we'll see how they really try to push the fact that, well, those that are using the app are certainly pretty addicted. Bloomberg's Corey Johnson, thank you very much indeed. Great insight from you, and indeed David Kirkpatrick, Techonomy CEO and our guest host for the hour, sticking with us. Now, the company's social finance, often known as SoFi, is close to raising about $500 million in a funding round expected to be led by private equity firm Silver Lake Partners. That's according to people familiar with the matter, who say the round could come next week. It will bolster the expansion of SoFi's online lending and personal financial services. The investment round should include several Asian investors who will purchase SoFi's loans and take an equity stake. Coming up, Elon Musk is known for his larger-than-life business ambitions, but he's calling his latest venture boring. We'll dig into this week's Bloomberg Business Week cover story next. This is Bloomberg. Elon Musk is taking his talents underground. An advocate for clean energy and a hawk for climate change, Musk is now trying out being boring. At least that's what he's calling his latest project. Musk has a new venture, The Boring Company. This independent company is set out to change traffic forever by doing none other than digging holes and making tunnels. The Boring Company doesn't have full-time employees or a business model, but it's a story big enough to be the cover of the latest Bloomberg Business Week. And reporter Max Travkin joins us now, and still with us is Techonomy CEO David Kirkpatrick. Max, great story. And I want to talk to you. You spoke with Elon Musk, and you said he was sleep-deprived, pretty loopy. Talk to us about this boring company, this digging holes that he's on about.
So I saw him the same day that he had met with Donald Trump as part of that strategy and policy forum that became so controversial. And my read was that he seemed sort of relieved to have made it through the week. There had been a lot of criticism of him and some of the other CEOs. So his plan is simple. He is going to start digging holes in the ground and turn those holes into a vast network of underground tunnels that will change transportation forever. At least that's the plan. And of course, Elon Musk, he's one of these people who's incredibly good, probably the best at taking these kind of way out their ideas and getting them to a place where people, regular people, are able to kind of buy into them.
David, do you buy into it?
Well, I just have to say, Elon Musk gets the gold medal for audacity in business. You gotta love it that he's so willing to, like, take a flyer on these really big ideas. Although, honestly, exactly why he wants to dig all these tunnels, I'm not entirely sure. Max's story was terrific, as you said, but it didn't fully answer the question of why.
So I can pick that up as best I can anyway. I mean, so as people maybe know, he's been talking about this plan to create this high-speed rail system called a Hyperloop. He sort of open sourced these plans and has kind of been encouraging other people to create Hyperloop pods. My read on this is that the tunnel thing is partly an outgrowth of that. The Hyperloop, if it were to happen, if a super high-speed rail system were to happen, it would require lots and lots of tunnels, because once a train is going, 500 miles an hour or 700 miles per hour, it can't make a lot of turns. So you need some tunneling, and therefore, somebody's got to do those tunnels. So why not Elon Musk? I think another reason for why is there's an opportunity with respect to just like general sort of lack of innovation in construction and in tunneling. Elon Musk, one of his strengths is taking kind of existing technologies and figuring out how to do them cheaper and more efficiently with some great branding. I mean, you look at, obviously there's a lot of innovation at Tesla and SpaceX, but the core of those businesses was not creating lots of new technology. It was sort of integrating that technology and marketing it in a really smart way.
But Max, if I could ask you, of course, there's possibly a lot of reason why we might want more tunnels. I love that. I mean, if we do have an infrastructure boom because of President Trump, maybe. The Hyperloop's fascinating idea, which interestingly, Musk up till now hasn't really personally committed to. It's been developed by others. But what is it that he's going to be able to do differently with tunneling? I mean, he's buying an old traditional tunneling machine based on your story. Where's the innovation going to come, do you think?
I talked to some tunneling experts for this, and kind of the upshot is I expected that they would laugh at it, and they're not laughing at it. They're taking it seriously. Now that might be because Elon Musk is a billionaire. Maybe they just sort of it's to their advantage to take it seriously. But what they said is basically that there has been very little innovation here. So for instance, in Seattle there was this machine called Big Bertha that got stuck underground for months. I think a year and a half or 2 years, and it broke down, and they basically weren't able to repair it. They had to dig it out of the ground and lift it up with cranes, and it was this huge delay. Now that happens all the time. So a tunneling expert I talked to said, look, you could go a lot faster if you just had enough spare parts on hand, if you just did a few things in smart ways. And I think you could make a similar critique about aerospace when Elon Musk got into it. Now, of course, the other thing I think that we obviously can't ignore is that we are at a moment in the sort of political climate where infrastructure investment has suddenly gotten more palatable, and I think he's also seizing that opportunity, obviously.
Max Geoffrey Cain, great piece. They, of course, lead on this issue of Bloomberg Business Week. I urge readers to go and find it. And David, you're going to be sticking with us. And, of course, you can hear from more on this particular magazine over the weekend, Saturday and Sunday. Now, still ahead, Atomico is one of the single largest VC funds in Europe, and they've just closed a $765 million fund to invest in European tech founders. We hear from the CEO. That's next. And this is Bloomberg. On the latest tech funding board, London-based venture capital firm Atomico has just closed a $765 million fund to invest in European tech founders. It's one of the single largest VC funds in Europe and comes at a time of mounting economic and geopolitical headwinds in the region. We spoke to Atomico CEO Nicholas Zenstrom from London and asked him, whether he finds it difficult having a Europe-centric fund when most of the world's most valuable tech startups are in the US and Asia.
It's interesting because that's typically the view that most people have, that you know, Silicon Valley and then of course China has producing all these giant tech companies. But if you look at the opportunities here in Europe, it's pretty remarkable where we got to in the last 10 years since we started Atomico. There's been over $40 billion companies here in Europe. And in some of these areas, such as artificial intelligence, Europe and actually London and UK have some of the leading companies. So we believe that there are great opportunities here. At the same time, there's an undercapitalized market. So we think that prices, or the data tells us that valuations here in Europe are lower than in the US and China. So we think the opportunities are pretty good.
That was Atomico CEO Nicholas Zenstrom. And staying in the United Kingdom, Microsoft has once again hiked the price of some of its products there. This because of the decline in the Great British Pound we've seen since last year's Brexit referendum. The company said it's increasing prices on software and laptops. The Surface Book laptop, for example, cost £1,300 last February. It's now 12% more expensive and £1,450. And in this edition of Out of This World, Boeing and SpaceX will not be certified this year to send astronauts to space. A new report from the US investigators says certification may be delayed into 2019 because of potential safety hazards. Since the space shuttle program ended in 2011, American astronauts have relied on the Russian Space Agency for rides to the International Space Station. In 2014, NASA chose both Boeing and SpaceX to work on commercial crew transportation capabilities. Their first manned flight to the ISS is now slated for no earlier than late 2018. Now, coming up, Apple TV has vowed to revolutionize your television, but it hasn't quite done that. A look at what the tech giant has in store for its television operations. That's next, and this is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Russia's Vladimir Putin is calling for a dialogue with U.S. intelligence services and other NATO members. Speaking in Moscow to officials of Russia's FSB, Putin said it was in the general interest to reopen communications, adding that cooperation will bring stronger results in the fight against terror. Secretary of State Rex Tillerson met with his Russian counterpart Sergei Lavrov today in Germany in the highest level face-to-face contact between the U.S. and Russia since Trump took office. Both are there for a Group of 20 conference. Hamas and Hezbollah are reacting to President Trump's announcement that he is not committed to a two-state solution. Hamas says the Palestinian Authority should give up the illusion of settlement through negotiations. Hezbollah says it marks the end of the peace process. Iraq says the death toll from a car bomb in southwestern Baghdad is up to 47. Nearly 50 other people are wounded. Officials say the bomb targeted car dealerships. Islamic State has claimed responsibility. Malaysia has arrested 2 more people now linked to the death of the half-brother of North Korea's Kim Jong-un. Authorities arrested a Malaysian native said to be the boyfriend of the second suspect. Police say he provided information that led to the arrest of a female Indonesian passport holder. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Wednesday here in New York, already 6:30 a.m. Thursday in Hong Kong. I'm joined by Bloomberg's Stephen Engel with a look at the markets. Stephen, good morning.
Thank you very much, Elisa. Well, Asian stocks, they're facing a number of down arrows early on after Wall Street's flat and sort of mixed session. We're looking at the New Zealand main index down by 0.2% early going. Sydney futures also down slightly but fairly flat, trending lower after the benchmark index yesterday closed at that fresh 21-month high after a seesaw day that saw Telstra shares fall the most in 6 years after first half results disappointed. Nikkei futures also, I might add, down about 0.8% in the early going. The big story in Asia is a developing one. A South Korean court has approved a special prosecutor's request for an arrest warrant for Samsung's heir apparent J.Y. Lee. He has been remanded to prison in Seoul to await what will likely be formal charges and eventual trial that could be as long as 18 months away. Prosecutors allege Lee was involved in bribery, perjury, and embezzlement as he sought to consolidate power to take over South Korea's most powerful conglomerate from his father. I'm Stephen Engel in Hong Kong. More Bloomberg Technology coming up right now.
This is Bloomberg Technology. I'm Caroline Hyde, and back to a top story this hour, Snap. The company is about to set out on its roadshow. It will be pitching a stock to investors that's, well, more expensive and comes with less shareholder control than any social media company that we've seen before. Bloomberg Technology's Sarah Fryer and Bloomberg News reporter Alex Barinka report.
When deciding whether or not to put money into Snap, investors are inevitably going to compare the company to its peers, Twitter and Facebook.
So which is Snap hoping you'll equate them to? Well, neither. My sources tell me that Snap execs want you to think of them more like Amazon. Seems strange? Well, there's a method to the madness.
Because Snap is such a secretive company, investors will have to decide whether they trust management to build a business on the backs of highly engaged young users.
For now, it's unclear what that will look like outside of the Snapchat app and its spectacles.
While the company grows and expands, management has told its bankers that financial performance could be, quote, lumpy. And don't forget that Snap's revenue model is only a couple years old, and right now, losses are higher than sales.
Sound familiar? Razor-thin margins and fluctuating financial performance are Amazon trademarks.
CEO Jeff Bezos has alarmed investors with his massive spending to get into new markets. Some of his efforts have been successful, like Amazon's e-commerce platform or its cloud services, while others have been duds, like its Fire smartphone. The bottom line is Amazon investors have had to be patient, and in the long run, it's really paid off. The stock is up 43,000% since the company went public in 1997, and in the past 10 years, it's up 2,100%.
But Amazon is a once-in-a-decade consumer internet company, and Snap is a much younger and much riskier bet. For now, Snap CEO Evan Spiegel is going to be left asking potential shareholders to trust him.
That was Bloomberg News reporter Alex Barinka and Bloomberg Technology reporter Sarah Fryer. Now let's bring in David Kirkpatrick, CEO of Techonomy. You were pretty negative just before when we started talking about Snap earlier, and I'm going to play the other side because this is setting a new way that we communicate. This is Snapchat, a company that understands millennials like no other, led by a man that understands millennials. Could this really actually be one of the best bets this year?
Well, I didn't mean to sound completely negative before, but I don't think it's going to be a fantastic bet if you think it's going to perform up 43,000% and be like Amazon. Amazon's ambition originally was much broader than any ambition that Snap has articulated thus far. I do think they have figured out the millennial mindset in a way that no other company has, and they get gigantic credit for that, and there's clearly a lot of money in it. Exactly how they extract that money is what is unclear.
And we'll see how that business model continues to progress. And the roadshow will, of course, articulate that as they go forward. David Kirkpatrick sticking with us because we're going to be changing companies now. More than a decade ago, Apple vowed to revolutionize TV with its own set-top box. But as the company gets ready to unveil its fifth generation of Apple TV, research shows only about 12% of connected television customers actually use it, with many customers opting for cheaper devices from Amazon and Roku. So where did Apple go wrong? Joining us now with more is Bloomberg's Mark Gurman, who covers Apple, and still with us, of course, Techonomy CEO David Kirkpatrick. Mark, great piece that you have out on the television, and you spoke to an insider who said the problem with Apple TV is it's evolutionary, not revolutionary. When and can it become revolutionary?
I think it can. It really comes down to the content deals and coming out with software that's more unique. Right now, you connect the Apple TV to your big 65-inch, 70-inch TV, and it looks like a giant iPhone. It's built around a store. There's icons. It's really not unique. It's basically bringing what the iPhone can do to a much larger display. That's not exactly what people want. People want, inside the company and outside the company, something much bigger, much more ambitious, and that really comes down to being able to strike content deals where people can say, hey, we don't need DirecTV anymore. We don't need Sling anymore. We don't need Sony's View service anymore. We can use an Apple service on Apple hardware with Apple software, bring it all in together like they do on the iPhone and the Mac, and really pay 30 to 40 bucks a month to get something that no other cable or satellite dish provider is offering.
David, does that whet the appetite? I have to say, I have both an Apple TV and the Amazon Fire TV, and I tend to lean on the second more. Do you think that the future is bright when it comes to Apple TV?
Well, you know, I think Mark's right that they have not presented a transformative experience to the customer yet. And coming from Apple, that's what we would expect. And as his article explains, you know, I think it is legitimately a disappointment that after, now up to the 5th iteration, they're not likely to really be there yet with a transformative device that comes even close to what they achieved with the iPhone. So, yeah, they're basically in a market with a lot of competitors, and, you know, I don't think they've distinguished themselves. What I'm interested in knowing is the degree to which their content ambitions, some of which they talked about more publicly this week than ever before, might really be the key to move it forward, as Mark was implying.
Right. So, I mean, I think the content ambitions are well beyond what they have come out with to date. They've been releasing new music videos and different content through Apple Music. They really haven't done their own original content otherwise. In terms of movies, of course, they're doing this new Planet of the Apps show, which is coming out later this year in the spring, but nothing like a Netflix or an Amazon. And when they start doing stuff like that, if they do, that's going to be another big push towards content on the Apple TV.
Yeah, Mark, I mean, talk to us about the hiring that they did, because this all started with your great reporting saying that, look, by the way, Tim Turdwell has just left Amazon and he's gone over to Apple. Is he the man that's going to change all this? Are they now freed up to make these sorts of content alliances and deals that will bring the new future to us?
I think they hope so. Hiring this person who built the Amazon Fire TV, really embraced it, pushed developers toward it, new features, might speed up the pace of innovation that Apple does for the set-top box. It also frees up Pete Destad, who previously ran Apple TV product direction, to do content deals. And previous to Apple, he was a senior VP at Hulu, which is really known for striking strategic partnerships in the content space.
So it looks as though the future could be bright. David, what about the price point, though? Because it's interesting in the story that Mark puts out, the price point is much more for this new iteration of Apple TV at $149, twice as much as its predecessor and much more than Amazon. Are people not going to be too price sensitive by things that come from Apple?
Well, Apple is able to charge more for this kind of thing than anybody because typically they have way more interesting and useful features, which is not the case in this instance. So I think, you know, it's still not that high of a price by the standards of these kinds of devices, but I think they really don't have the right to price it the way they are right now. And the onus is on them to really start doing some real innovating, and it may require some clever work with the rest of the industry that they've shown in some of their other products, but they haven't yet really shown here. And Mark explains how they've really failed on that thus far in his great story.
And I think we'll see if that clever work comes to fruition with none other than Mark Gurman, Bloomberg, of course, technology reporter and breaker of that great story on the Apple Tech TV, and Techonomy CEO David Kirkpatrick. Great to have you with me throughout the show. Thank you very much indeed. And this day in tech history, an end of an era. BlackBerry's share of the global smartphone market is now 0%. In the fourth quarter of 2016, the once king of the smartphone world sold just over 207,000 phones. This according to research firm Gartner. Last September, BlackBerry announced it would no longer make its own phones, instead of relying on third-party partners for any future BlackBerry-branded devices. Coming up, the Chan Zuckerberg Initiative has made its next bet, aiming at early education market. More on the next story. This is Bloomberg. Now, Facebook CEO Mark Zuckerberg has shared a lengthy letter explaining his vision for the future of the company. The 6,000-word manifesto of sorts outlines the social network's plans to reduce sensationalism and Zuckerberg's aim to reboot globalization. Writing, Facebook stands for bringing us closer together and building a global community. When we began, this idea was not controversial. Every year, the world got more connected, and this was seen as a positive trend. The post struck a political tone, giving populist movements that have sprung up in several countries, including the United States, with the election of President Donald Trump. Now, speaking of Mark Zuckerberg, the Chan Zuckerberg Initiative is diving into the early education market. The project will be investing in Brightwheel, makers of management and communication software for early education. Now, $50 billion is spent annually on pre-kindergarten education by parents, which dominate technology throughout the sector. Brightwheel is aiming to create a hassle-free way for educators and childcare providers to manage their business while sending parents updates about their kids. Joining us now is Brightwheel founder and CEO Dave Vasen. Dave, I'm fascinated with this company because it vaguely blows my mind that this is only now being done, that people would leave their children in pre-kindergarten and, of course, suddenly wouldn't have any connection. It would all be, paper.
That's what we hear, and that's what I think, whether it's investors or customers, everybody says this should have existed. This should have existed a long time ago. But the trends weren't there, and the things weren't right. And I think, we got in there with the right product at the right time, and that's why we're seeing the reaction, the response to what we're doing.
And now you've got backing $10 million Series A, GGV capital in there, as well as the Chan Zuckerberg initiative. What do you do with the money? How do you start to evolve the business model? Because this is for profit still as well.
It is for profit with a mission, and we believe that as we grow and as we have more scale and greater reach, that there's a massive opportunity to impact the schools and the families and the children that we're working with. The investment for us is about primarily growing the team. We've done a lot and been scrappy with what we have, and now it's about doubling down. We'll double the team this year, invest primarily in the product, and really expand in what we want to offer. Our customers are telling us that they want a lot more, and we're going to go do that for them.
We were just talking about the size of the market here. Yeah. $50 billion that parents are spending per year on their children pre-kindergarten. Why is this so underserved as a market?
No, and I'll say that's just the U.S. This is a global problem, a global industry, and when you step back and look at it, every kid under the age of 5 is going to go through some form of early education, preschool, daycare, after-school programs. It's actually the number 2 thing that families are spending on. So it's the number 2 household expense. If you have kids under the age of 5, a lot of families would actually hear that and say, no, it's the number 1 thing that we're spending on every month. And it just traditionally hasn't been served well. It's also critically important. So when you look at families that are working, they need that form of childcare or school to actually be able to work on a day-to-day basis. And it's one of the biggest things that you can do when you look at our group that's coming in today. That's what they believe in is the biggest thing you can do to affect childhood outcomes and long-term development for those kids. So really, really big, really, really important, but completely broken. And we were able to step in and fix some of that.
And so the way in which you fix some of that is it's almost connectivity. They're able to sign in children, sign out children, send pictures and the like. There'll be other products coming through. It's sort of making an app almost for your childcare. Are you going to look outside the United States? Is there international growth here?
There is, yeah. And it's exactly what you said. It's looking across the spectrum. What we did, I think that was unique early on, is just spent months observing and shadowing folks on the ground and understanding what do they need, what are they using. We saw a lot of paper, a lot of Excel, a lot of old software. And so it's bringing all of that together and making it super simple and easy to use. And the response to that is very global. So we have folks in Brazil and Portugal and China, India using us. We haven't made a big effort there, but we've seen this incredible response. And it's a universal need, both from the school itself as well as the family. And when both of those sides are broken, and when there's a solution that really solves it, it's a universal solution.
It's a freemium model.
It is.
And so, as yet, it's been free, and that's helped to get into, I'm sure, emerging markets like Brazil, which perhaps couldn't afford to escalate. But what are the areas in which companies and schools will start to give you money?
Yeah.
What will you offer them?
Yeah, and we're just starting to do that shift, and we've had this amazing response. Even if it's free, I would say it still has to be really good, right? This is something that as a business owner, you're going to adopt, and as a parent, that you're going to trust. And so we have really built a really good product at its core. The now moving into premium is all about advanced solutions. So if you're bigger and you want to add more and manage your staff and your billing, and you want to manage more components within your school, there's going to be new learning components, for example. What we saw, which I think is really important, is that these are people who want to go in and run a school. They end up having to run a business at the same time. And what you get is this hodgepodge of tools. It's like 10 different systems that they're using to run. And you have paper, and you have Excel, as I mentioned, you have accounting software, all of these different things. And so what we're coming in and saying, no, that should all be one. It should be seamless. It should be easy to use. And so now we have this core product about communication and record keeping, and now we expand that.
One, very quickly,
yeah.
Why are not more businesses being invested in this area?
I think it traditionally has been very hard. It's really fragmented, and it's been tough to get scale within this space. And I think what we've shown is by just pouring our hearts and souls into the product itself and building a really great product, there's word of mouth and things spread and can move. But traditionally, it's been really, really hard.
It's been great having you on.
It's been a pleasure.
We wish you the best. Thanks very much indeed. Brightwheel founder and CEO Dave Vasen joining us there. Now, all day Friday, Corey Johnson is live from the 2017 NBA All-Star Technology Summit in New Orleans. Don't miss his exclusive interview on Bloomberg Markets at 10:45 a.m. Eastern with Take-Two Interactive Chairman and CEO Strauss Zelnick. Some get all the luck. Right now, Google's coming up. Google's Project LOON is cutting back on broadband, emitting balloons across the globe. We'll have the details next. This is Bloomberg. Now, an update on Samsung for you, as we earlier broke the news that South Korean court had issued the arrest warrant for the de facto leader of Samsung, J.Y. Lee. He now then was moving into court, as you saw him in these pictures. Samsung has said that they will do their best to ensure the truth is revealed in court trials, and Samsung Group is commenting in an emailed statement. We will bring you all the breaking news on Samsung as and when it comes. Now, in 2013, Google ran its first tests for Project LOON, an ambitious effort to circulate broadband-emitting balloons across the globe. Well, now the company says not necessary anymore. Executives say that the project, they've found ways to run the program with fewer balloons in particular regions. For more, we're joined by Bloomberg's Tom Giles. Break it down for us. Initially, we were envisaging blankets of balloons, and now it can be slightly more targeted.
They've figured out how to do this much more efficiently. This is another example of what people have told us internally, call it Ruthless Ruth. Ruth Porat has come in and she's really asked people to scale back these ambitious projects and really do things more efficiently, do things in a way that's going to help these different moonshots, if you will, achieve profitability more quickly. She's brought a lot more accountability, and this is just one of the projects where you've seen Google really kind of scale back, retrench a bit, and as you say, do things more efficiently. These were going to go everywhere. What Google has done is been able to take its computing prowess and essentially work on navigation systems, make these things more efficient and just need fewer of them.
And so the scale of the opportunity, the ambition, as far as we understand, is still there to provide internet across the world. It's just that they feel they've got a more efficient way of doing it through their own technology that they're using.
Right.
And it's the CFO that's driving for cost cuts, though, that is forcing this sort of efficiency. It seems mad that they couldn't find this before.
Well, I mean, what you had was a quickly growing company where a lot of people had, 20% of their time they were able to engage in these ambitious projects, try some different things. And that was really something that set Google apart. That was something that, drew people in, and it created this atmosphere of being an entrepreneurial place where you could take lots of risks. I think that's still encouraged at Google, but at the same time, there's this clock ticking in the background. There's this realization of you're not going to be able to do this forever. You're not going to be able to explore these things with abandon, willy-nilly. At some point, we're going to want to see some payoff. We're going to want to see some commercialization. We're going to want to see monetization of these projects.
And we just saw Waymo being spun off. The car area of the business is now standalone, and it's got to feed for itself and grow for itself. Do we have any idea when there might be a commercialization of the balloon project?
Of Project LOON, remains to be seen. I mean, they've cut some limited deals, but we weren't seeing a real kind of explosion in money from this. And I mean, their ambition remains, unchanged. They're about organizing the world's information, ensuring that people have access to Wi-Fi, ensuring that people have internet access in remote areas of the world. That's something Google still really believes in deeply.
And something that Facebook has been trying to solve as well. So we'll see who gets there first in the race, whether it's loons versus drones. We'll see.
Absolutely.
Thank you, Tom Giles, as ever, putting it into great perspective, Bloomberg's executive editor of Global Technology. Meantime, tech's revolving door swings again. Access, the division of Alphabet that includes Google Fiber, well, that's got a new boss. Gregory McRae, the former CEO of telecom service provider Aero Communications, will take the helm. But with the appointment, well, the Access subsidiary will be slimming down. According to a Bloomberg source, several hundred employees are moving over to Alphabet's main business, Google. And that does it for this edition of Bloomberg Technology. Remember, all episodes are now live streaming on Twitter. Check us out. It's at Bloomberg Tech TV weekdays at 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.